Time now for our Wall Street Week daily segment. The host of Wall Street Week, David Westin, joining us as he does every day at this time. And David, of course, a lot of talk right now about economic conditions and more importantly, the reaction function to it.
Yeah, exactly. And particularly in China. What's going on in China? Every single day we hear about something in China. What does that mean for Europe? What does it mean for the United States? So for some answers to those kinds of questions, we asked Stephanie Flanders, our very own Bloomberg Senior Executive Editor for Economics.
What has been the dominant narrative of the last few years, which is overlaying that slower picture, is the problem in the real estate market. The driver of Chinese economic growth to a large degree over the last 10 years has been the property sector, more and more money pouring into it, and of course more and more houses needed as China developed, became more industrialized, more urban. But way too much property was built. Debt has gone up way too high, and the policymakers have been trying to take the air out of that for some years, trying to do it in a way that they don't completely upend the economy, and that's been the ongoing challenge. And of course, it has produced this kind of drip feed of news about as one developer goes bust, another one question marks about whether or not they're going to make their bond payments. It's pretty hard to have a slow motion property crisis that doesn't turn into a full-on financial crisis for the whole economy.
Well, as you say, Stephanie, on the one hand, they want to take some of the air out. On the other hand, they don't want to do too much damage to the economy. I guess the question is, can they do that at the same time? There's already so much money borrowed against that property market. There's so much leverage in that system. Do they have a problem basically doing some of the big things that apparently the markets want to have done to bail it out? They want a bazooka, so to speak, but if they use a bazooka, they're just going to make the debt situation worse.
Yeah, and this is obviously something we've seen in other places. The problem with debt crisis, and maybe particularly the property crisis, is that the things that you might do to make the situation easier in the short run are only going to give you a longer-term problem, further down the road. So if you throw more money at the problem, you allow more borrowing to build up, then that debt issue becomes ever larger. They definitely don't want to do that, although they have been forced to pressure banks to reduce mortgage rates, try and encourage more lending in the sector at the margin. They have cut interest rates, but that's primarily to sort of stop the rot, to stop it infecting the entire Chinese economy and limit the damage to consumer confidence and to spending. But they don't want to just put a floor under this sector, because there is, potentially 3 or 4 more years where you should see prices falling. That's the amount of excess stock that's built up, and a price is going to have to be paid by developers, by the owners of houses who see the price of their assets fall, and certainly by the banks and state governments that have become rather dependent on these properties. They want to allow that to happen, but without completely tanking the economy. And I guess that's the question in everyone's minds this year: is whether can they do that?
Stephanie, I'm not sure that President Xi is inclined to go to school, as it were, on how the West has handled its economies. But we did have, of course, the debt crisis in Europe recently. Before that, the great financial crisis in the United States. Are there lessons that could apply to China that he could learn from if he wanted to? Or is it just a very different situation?
At some level, and you've seen a lot of these as well, David, at some level these crises always come down to the same thing, which is debt. And certainly that's common to all three of those, whether, the global financial crisis in the US, the Eurozone crisis, and this current situation. I think there were elements in the Eurozone crisis of what we're seeing in China. If you look at places like Ireland or Spain, where enormous amounts of money had gone into, too much money had gone into real estate, leaving this big pile of property debt. How and when that was going to be socialized, how that debt on the private sector was going to be shifted onto the public sector balance sheet, was the question that we asked during the Eurozone crisis, and how much solidarity was there going to be among Eurozone members. Obviously, that aspect doesn't apply in the case of China, but I would say the sort of corrosive thing in the markets is that lack of certainty about who's going to bail out, where's the bailout going to come from, and is there a willingness to do it?
And it's uncertainty not just for you and me, other observers. There's uncertainty in the markets, and there's uncertainty on the part of the consumers as well. There's some indications that maybe there's something of a losing of confidence. I won't say it's lost, but a losing of confidence, basically, in the fundamentals of the Chinese economy internally. How does President Xi recapture that if, in fact, he is in danger of losing some of that confidence?
Well, he's changing the narrative. Remember, it used to be about, or to some extent at least, it was about double-digit growth rates. We've already seen the expectations for growth in China be pushed down over the years, as it becomes a more mature economy, as its workforce peaks. We've had a shrinking workforce for quite a while. We're about to have a shrinking China population. Inevitably, that means a slowing growth trajectory. And I think the authorities have been, and President Xi's been quite good at sort of talking down expectations for long-term growth. But you're right, there is still, that stability and prosperity are the absolute centre of the Communist Party's appeal to the country, and its continued sort of right to hold power in China rests on its extraordinary economic success.